Hi, today what I want to talk about is, are you paying too much national insurance on your pension contributions? So let's talk about the two types of pension contribution you can make. You've got a pension contribution which is known as taxed at source. So what happens is you don't get any tax relief when you're in your salary or anything like that. You actually get tax relief in your pension fund where they claim it directly from HMRC. And the other type of pension contribution you can make is called salary sacrifice. And that's when it comes off your salary before you're taxed, which means you get taxed on a lower amount and you pay national insurance on a lower amount. So you pay less overall. So then there's a clear winner in the two types of contribution, and that is salary sacrifice, but it's not always appropriate for everyone. But what I really wanted to point out in this video is it's not the default position either. With auto-enrolment pensions, the default position is taxed at source. So employees with auto-enrolment, they don't actually get tax relief in their pay slips. And what happens is the tax relief comes directly from HMRC. So the big downside of this is HMRC only give tax relief for the income tax element that you paid. But what they don't give is tax relief for the national insurance element and the employer's national insurance element. So it's actually an inferior way to pay into a pension, but it's the normal way. So what people should do instead, and employers should really push this now, because national insurance for employers is higher than it's ever been. It's lower than it's ever been for employees, but it's still something. So really, employers' national insurance is 15% now. Employees' national insurance is 8% now. Why pay any of that if you can go down to a salary sacrifice arrangement? So the challenge with salary sacrifice is because it's not the default position, employees have to opt in, because it means them giving up part of their salary so their employers can actually contribute more. But they save that national insurance, employers save that national insurance. The challenges come from if an employee is on minimum wage, like in terms of the cash they take home, it can't go below minimum wage. So if salary sacrifice pushes them below minimum wage, that's a problem. If they're applying for a mortgage, if they've got to show a certain income to get other benefits or tax-free childcare or free childcare, it can interfere with that. And you've got to have the right contracts and the right HR support set up to be able to deal with that. But if you are not getting tax relief in terms of your national insurance, then definitely look at salary sacrifice, talk to a HR person or an accountant about how salary sacrifice works. And you could end up saving quite a bit of money on your national insurance costs.